કોકલદાસ એક્સપોર્ટ્સના એમડી સાથે જ જે પ્રમાણે આ રિઝલ્ટ રહી રહ્યું એની પર વિશેષ ડિસ્કશન કરશે કંપનીના મેનેજમેન્ટ શિવરામ કૃષ્ણન ગણપતિ. Thanks very much for joining in, sir. Let me start with the overall kind of factors that were supporting for the growth momentum. Can you help me out? What kind of growth are we expecting for the whole year round? Because this time around we have already witnessed a stabilization post the disruption of COVID. Let me start with some of the highlights.
Sure. So we from a business standpoint, the highlights are that the demand is very, very strong. The US market seems to have reached pre-COVID levels in terms of apparel sales. So retail sales in US has YTD, that is January to June 2021, is 2% above 2019 levels, that is pre-COVID levels. So what we're finding is that the demand has caught up over pre-COVID levels. If you look at e-commerce sales, e-commerce for apparel and accessories, that is about 50% above 2019 levels. So the demand is strong in US. Likewise, in Europe also, I'm finding good demand traction, and it is catching up to pre-COVID levels. So from that perspective, our own customers who are selling these garments are coming back to us and demanding more production. So demand is good, and we are trying to scramble up to produce more and more for our customers. In the first quarter, we lost production because of lockdowns in Karnataka. Most of our first quarter, we had challenges in terms of operating our factories. In May, we were asked to lock down completely. So we had almost 100% lockdown in the month of May, for most of May. And in June, we were allowed to operate at 30% capacity utilization. So come July 5th, we were allowed to operate at 100%. We are actually working at full capacity at the moment and trying to catch up on the lost production for first quarter. Because the demand is so strong, we are pushing ahead with our production to expand our business.
Okay, that was on demand front. How about the other markets in terms of US, Europe, and what is the order book looking like in terms of visibility for next 2 to 3 quarters, plus the inventory levels that we are witnessing right now?
The order book is very, very strong. It has been the strongest ever for us at this point in time, and we're very happy with the order book. We have booked to full capacity, so I can't take any more orders because my capacity is full at this moment. We're also looking at augmenting capacity. We had just one factory come up in Tumkur, which started this month, and that will ramp up in the next 2 to 3 months and reach full capacity. We are also looking at adding one more factory in Madhya Pradesh, in Bhopal. So that will come up by fourth quarter of this year. And then we are also looking at additional capacity. So we are building up capacity to take on more orders. Order book that way is pretty strong. And we are targeting a revenue which is above FY20 levels, which is the pre-COVID levels, way above that. So we are well on track to achieve that at the moment with our order book as well as capacity situation.
Okay, agreed, sir. And quick comment in terms of margins. What is the band that we are looking for the annual maintenance? We have been witnessing quite a volatile trend in terms of raw material pricing. What should I expect on that front?
Raw material pricing, by and large, we tend to pass it back to our customers, and we tend to buy fabric where the volatility has been little less than the yarn. Yarn has seen a little more volatility. Having said that, we anticipate that our margins will only improve. We are expecting, certainly an improvement over last year's level in the year ahead, and that's a trajectory that we want to keep it that way. So we will see year-on-year margin improvement, going forward.
Okay. One more thing on the debt front. You have already reduced your net debt, sir, if I'm not wrong, by nearly 30 to 32 crores around. What is the trajectory looking like for the end of FY22?
So FY22, this is the lowest at this point in time. We may, as the business grows, we will have to take additional working capital debt in line with growth of the business. So we will not see much of a growth, but we will see marginal growth, but that is in net debt, primarily in line with business growth.
Okay, agreed, sir. Thanks very much for joining in, sir. With best regards from my team as well, that the coming quarters we do yield more better results than this, and we surely come up from the COVID